So similar fashion, what we are going to do is, I'll be asking questions, you can post your answers in the WhatsApp, which I can go through, and we will have a discussion that way, fine? So today, what are the things that we are going to look into? So basically, I am just targeting to complete the study note 12, which is about evaluation of corporate image, and it has rather many things inside it, okay? And information system security audit. Let us have an introduction today on that, and later on we can proceed with, because systems audit, cyber security, forensics, all these are all important part of audit. Of course, that comes with a hint of a technology. So now what is there in place, and especially the banking sector is the one which comes under the information security audit. It's very important for a banking sector. So we will be going through, what I have planned is, let us go through what RBI guidelines are for the banks. And what is that? They have their rules and regulations in place. Well, we look at RBI rules and regulations for the banks to comply with. Fine? Okay, so let's start with audit checks of different managerial functions. So we have different managerial functions that we have been like studying for ages. What are all the things part of management? So it is planning, organizing, leadership, control, okay? So all these things, even staffing, there are so many functions. But how do we perform audit checks of different managerial functions? So here if you see, basically, let us look into each and every managerial function. So planning is basically setting objectives, forecasting or determination of the course of action for the future to achieve objectives. So what are all the questions that comes to your mind when you do an audit check for planning? Okay. So the first one is whether the immediate organization objectives are clearly stated in writing. So organizational goals, and one more thing that we have to insist upon is how these goals are being communicated to the different levels in an organization, okay? And then how it is rolled out, and how the individual goals are set up, and all these individuals' goals put together work towards attaining the organizational goals. It is not like individually we grow, we attain something which is away from the organizational goal. So synchronization of individual goals to that of the organizational goals is one of the important perspective. Then does organization know the methods it will use to achieve the objectives? So it is just not enough. You just give a vague statement, okay, we got to improve on profits. No, that's not the way the objective statement should be. The objective statement should be something which is measurable, which is attainable, okay? And whenever there is a goal-making decision, we have already seen, when there is a participation in goal-making decision from your own employees, then it becomes much easier for them to actually even achieve it. Because if they think, this is what I have taken up as a goal, then I should strive towards achieving it, okay? And whether alternative courses of action are available to achieve the objectives. If not this way, what is the other way around? How does the achievement happens? And how frequently the objectives, plans and policies are reviewed. So mostly annually these planning happens, organizational objectives are set, organizational goals are set or framed, okay? And whether these policies, objectives, plans are prepared keeping in view the external factors like material, resource availability, government policies and directions, pollution and environment. So if you look at, see, when the budget is rolled out, right, it's the monetary policy. So, it's the policy that is rolled out by the government, right? So the budget, if you look at, so how the allocations are made, what are the rules and regulations that pertain to maybe say foreign direct investment, or maybe what are the things that you can go for achieving go for the sector wise, okay, whatever is rolled out from the government side. So all that has a bearing impact on organizational goals. So it's not just the internal factors that needs to be considered, but also the external factors such as materials, resource availability, government policies and directions. All these should be taken into consideration while planning. Then, coming to organizing. So organizing is the function of management that involves developing an organizational structure and allocation of human resources to ensure whatever objectives have been planned for in your planning phase. So the characteristics over here is the organization must not constitute a rigid structure. It must be capable to adapt itself according to the changing situations. The work must be divided into whole and not in bits and pieces. Proper and clear understanding of responsibility and authority. That is what? Authority, proper authority with responsibility. It should go hand in hand, and this authority and responsibility should be defined in a clearer way so that it doesn't result in overlapping of responsibilities, overlapping of accountability, right? Okay, just give me a minute. Yeah, just a minute. Sorry for the interruption. Yeah. So here, what are the things that needs to be kept in mind? First one is the organization structure and the organization chart that depicts clearly the line of authority and responsibility. Are there overlapping responsibilities or authorities? Because this will result in a wasteful activity. Then how does the management ensure that the responsibility at different levels, okay, are being discharged properly or not? Whether systems, procedures, policies and responsibilities and authorities have been compiled in the form of manuals and distributed to persons concerned. So nowadays, when you look in big organizations, okay, so the policies and stuff are just not like that rolled out wherein you have a manual to go through. Instead, they introduce various training programs. So in the training programs, okay, the policies are translated to the at different levels. So these are also mandatory trainings which makes the human resources, that is the people, to get well versed with the plans, the policies of the company. So this is what it is done end of the day. So when it comes as a manual, it has its own disadvantages because it's quite boring, right, to go through those things and remember it and stuff. But when it comes as a learning process, it'll be always there in your mind. And one more thing is they provide even case studies. Okay, so what will be your stand if such situation arises? How will you react? Okay, and then whether the organization is structured to prevent problems rather than go on firefighting. That is proactively how you work on than being reactive. So are mistakes tolerated within reasonable limits and used as a basis for helping the decision maker to learn and improve the performance. Then organizing is done. You have put all the human resources in place in your organization structure who are going to be motivated. Of course, motivation is also one of the part of your management process. How you are going to actually scale your human resources to achieve the objectives and goals. Then comes coordination. Coordination is, you have seen different designations like parts and parcel of an organization, but how you are going to coordinate the work when it is all going to work together. So coordination is bringing together all parts of an organization to act in harmony with a view to achieve its goals and plans. So basically, if you look at coordination, so whether the responsibility for the coordination of various functions at different levels has been defined clearly, whether a climate of mutual trust and team spirit exists among the employees. Working in teamwork is one more important thing that is insisted upon. So when you are actually hired into an organization, right, what the organization expects from you. It's not just enough you are good at your work, you are good at your meeting deadlines, but also you should know how to work in a team, work as a team and contribute towards the goals. So you might be playing an individual contributor role, not necessarily a team manager or a team lead, okay? But still what is expected out of you is, are you efficient or are you able to work in teams? So are there management or plant-wise committees for coordination among different sections and functions? And there is lot of cross-functional things happening. Okay, so in corporate, if you see, you have both horizontal functions and the vertical functions. Vertical functions may be the departments, okay? Horizontal functions are the levels. So in both the ways, there are cross-functional sharing of knowledge, okay? That will bring in harmony. Whether the budgets and plans are finalized at joint meeting of various functional supervisors or heads, are there detailed guidelines to managers to coordinate various activities, particularly in relation to dealing with outside public? Whether the sales force, purchase force are given feedback about their performances and corrective actions necessary to make up the deficiencies, if any, and whether the top executives are promptly informed about the constraints faced by the organization in achieving its objectives. So many companies do follow such open door policies. You know, there is, in MNCs we have such culture wherein you don't have doors for any of the cabins. That means you are there to access any of your supervisors or the next levels. Your easy, the accessibility point of view and the way you put forth your problems, right? You need not, this open door policy is actually given, floated in order to give a lot of freedom, okay, freedom of expression. Like what? It's not like in a typical company where you have a separate cabin for a manager, okay? The manager sitting in a cabin and you got to take an appointment, go there, go meet with him. It's not the way. Well, you look in many MSCs and even many organizations that are scaling up, and at a higher level, if you see, you have such open door policies, okay? So how far the top executives are promptly informed? When will they be promptly informed? Only when they are easily accessible. Okay, or you set up a call, you set up a meeting online and that will do. Then coming to leading or motivating. So leading involves influencing others. So a leader is a person who influences others or who convinces others to follow what he is telling. That is what is leadership quality. And then effective leading, if you have to lead a team, of course you should be good on the motivating side of your team. So how you push up the spirits of your team, how do you scale up their tempo for work, is what is a very good leadership quality. So the management auditor will have to evaluate this factor through questions such as what are the systems of reward and punishment to motivate people. So systems of reward. So if you see how the appreciation letters gets rolled out, even an appreciation letter, it doesn't cost a single penny, but that is a motivating factor. Okay, and you have something called star performer of the week or fortnight or month, which is just stuck in, I mean, your picture is stuck, or the whoever is the performer. Okay, the picture is showcased with the KPI achievements and other thing on the floor, okay, work floor. Then it is also a sense of motivation. Even a slightest of the gesture or giving them more challenging work, like involving them in projects or taking into consideration their level of interest and all those things. So these are all the kind of rewards that is not, which is not financially driven, okay. Whether basic economic needs of all employees are met by the organization. Whether employees are encouraged to be ambitious within the reasonable limits. Whether employees are provided with their periodical performance report for a constructive self-appraisal followed by personal discrete discussion to help him in making up his deficiency. So how you can see rewarding is on the positive side. Punishment is on the negative side. So of course if you look at the punishment, see if you punish them it is indirectly going to demotivate, but at the same time you have to rectify the situation and make the person grow up, make an individual to grow up. So how is that going to happen? You have to get into a personal discussion with the person, okay, and learn about his deficiency. What are all the things that you can do, like involving him in a training or involving him in a counseling session, and how is that you are going to help him out to come out of the deficiency. So it's not like everybody is a high performer in your team. You will have high performer as well as low coaches. So how you are going to drive them to achieve what matters. And leadership is, I would say, it's not you do it's an inborn quality, okay. I cannot say leadership comes out of the qualification. Of course it comes out of your experience, the way you communicate with your team, the way you take them forward, the way you make them feel that they are also being given importance when it comes to let it be decision making, more than decision making, on how the work should go on, okay. So how do you maintain the morale, okay, the high spirits of the team is one of the major quality of a leader. Then coming to controlling. Controlling is basically, I would say, when we look at from the monetary terms, right? So what happens, controlling is nothing but more of your standard analysis or standard costing that we do in terms of costing case. So what we do rather, we compare the actuals with the budgeted, that is actuals with the standards. That is one of the way the variance analysis happens. But here, the real purpose of control over here is to look back, for example, to make a product at the lowest cost and give highest margin, to launch a new product line successfully in the market, to achieve a given target within the limits of budget. So if it's an expenditure budget, right? Thus the purpose of control is positive and not negative. So just planning is not enough. Control is looking back of your actuals with that of what you have planned. So what the management auditor does to see or to check whether the controlling process is going on properly or not. The control should be exercised positively, that is, make things happen rather than prevent them from happening. Controls cannot be effective or useful if standards are not developed properly. So there comes the way the planning is done. The standards are set. Control begins with detection of a deviation from the plan or objective and ends with eliminating defects responsible for the variance. However, for a control to be really effective, it is necessary to have a means of getting information on performance. A control is more effective when it is built into plan itself. A plan which does not provide for control is not likely to be viable or effective. So for example, if we look at the utilization of machinery. So what is the total machinery hours available and what is the actual number of hours used? So the reasons for the difference between the two should be made available. So you have to just not look into the figures, okay, this is what is the machine hours available and this is what is actually used. You should get into the reasons, where the reasons actually probed into, whether this gap has been reduced by the management. Okay, so one of the reasons for underutilization may be an imbalanced equipment, or your workforce is not that well upskilled in dealing with those machineries, or there is a breakdown, power shutdown. Okay, so there are even labor unrest which will result in underutilization of, the production to stop over, and therefore it results in underutilization of machine hours. So such imbalance requires a very serious condition. The scrutiny may reveal the alternatives like the following, like addition of new machines of a particular type, employment of underutilized machines on other orders which may have to be specially solicited. Then coming to management functions audit. Management audit helps management in setting sound and effective targets. So all that we saw were managerial functions. Now how the management functions audit happen? First, the management audit identifies the objectives of an organization. That is what we saw in our planning. It reviews or provides guidance in the preparation of the complete statements of the performance standards and the yardsticks of measurement. That is how your goal should be translated. It should be more specific. Then the organization, this is part of organizing. It examines all the scope of work, liability centers. So once again, it is allocation of, that is what, authority and responsibility. It evaluates whether the management team is working in the interest of shareholders and other stakeholders. The management audit covers the following areas. So these are the basic management audit areas. First one, examination of organization structure in full or part thereof. Any kind of an audit you undertake for your client, okay? If it is for the first time, you always, just not from the accounting side, you get the chart of accounts. From the organization side, you get the organization structure within which the company is operating. Why it is important? Because if you have any queries, you will know whom to contact. So data collection is one of the important feature of auditing. You need the data. The data flows from different set of people. So you should know the person who is actually responsible or who will have the data and who has the authority to give it to you. So therefore, getting well versed with the organizational structure is important from any kind of an audit perspective. Next, checking the operations of the management and its effectiveness. Then the critical appraisal of activities of management executives. This is at the higher levels. Examination is to be carried on independently by the experts, and evaluation of the functioning of the management board, analyze the goals, plans, policies and activities of management, evaluation of the earning capacity of the management, and making management face or tackle any problem effectively in the future. So when it comes to management and its scope, first comes studying the organization, which we have already seen. Then searching for performance shortcoming. How will you search the performance shortcoming? Yes, you have any idea, Anu? You can post it in WhatsApp. Yeah. I'll just check out. Yes. Anything that comes to your mind. Searching for performance shortcoming. So basically, yeah, I am actually not able to hear you. So you can type it in the WhatsApp group. It'll be easier for me. Yeah. Yeah. See, management audit and scope. First we talked about studying the organization. Okay, whatever is the structure, policy, procedure, what is the information system, how does it flow, how does the decision making happens, and all those things. Well, we want to search for performance shortcoming. Okay. So how do you actually look up how far the performance is? What comparisons will you make? And in which areas? That is my question. Okay, standard actual comparison. Yes, that's correct. So there are different arenas. See, standard actual comparison comes when we look at the monetary goals. Right. So here, not from the apart from the monetary perspective, we have also non-monetary things, which will show whether the performance is going on or not. So if you look at that appraisal, first comes economic function with that of social responsibility. So what do you do? How are the different stakeholders like shareholders, employees, creditors, distributors, are they happy with your organization? So it is like is appraising their point of view, their level of satisfaction. So that will show how far the company is actually performing. We know very well from the stakeholders, shareholders, employees, creditors, everybody have their own choices. Like if we look at shareholders, they'll be interested in maximization, the growth perspective of the company, maximization of wealth rather than profits, getting more dividends. More dividends is not they are looking into. They are looking into the company's growth over a longer period of time. Then coming to employees, how well they feel about the job. So whenever you try to apply for a job, right, don't you ever go and check out what are the reviews of the present employees or the employees who have worked with the organization? So the level of satisfaction that they derive, the level of security that they sense, the work environment that they have worked in. So all these things are the feedbacks from the employees. Creditors, of course, how prompt the company is in repaying its debts along with interest. So how financially managed is the company. So all these things, instead of you going to the organization directly and questioning them, you can also look at the satisfaction index of all these stakeholders, which will indirectly give you how far the organization is performing. Are you able to understand? Get my point? Yes? Okay. Then coming to corporate structure, how the lines of authority and responsibility are being given. How the centralization or the decentralization of authority takes. Centralization is of authority is nothing but concentration of authority at only the top levels. So the lower levels are not given the authority in decision making process. Decentralization is so delegating of responsibility is just not enough. Delegation of responsibility with proper authority will make things happen. That is what we study under corporate structure. Earning growth and business prosperity. How far the earnings have grown, the revenue has grown. Okay. How far is the potential earnings, that is forthcoming projects, or how it is going to translate the opportunities. Okay. So this is what is earning growth and business prosperity. Service to the shareholder. What is the service that you provide to the shareholder? There are three basic criteria. One is risk minimization of their investment, reasonable return on investment, and reasonable appreciation of capital over a period of time. The shareholders' expectation is not the short-term profits. They are, I would say, rather the dividends are declared in order to attract the prospective shareholders. Okay. Then research and development. How far the company is spending on R&D work will help the company to sustain in this dynamic environment. So a strong research and development base is necessary for the company to actually have its presence for a longer period of time in the market. It will be up to date, or else it will become all redundant. Then coming to constitution of board of directors. So the leaders who are there to lead the organization, the decision makers, the quality of those directors is going to play a long way in getting the organization to move forward. Okay. So I am just interested to tell me one experience from my end. So while I was doing equity research kind of a role, so we used to prepare the entire profile of who are there in the board of directors. Basically, it is for US based companies. Okay. So while we look at the board of directors, so what as an investor, so it is called something called activism. Activism is the terminology that is assigned, and it is legal in US. Okay, so what they do is they acquire the shares of a company, of course a good share of the companies that is underperforming. So first is identification of the companies that is underperforming. So what I do, imagine I am that investor, I am investing in a company whose share, this is all about listed companies, okay, not the unlisted ones. So the listed company, the share value is say $10, okay. And there are also other companies in the same industry or other organization in the same industry which are really doing well. So first what I do is I invest in this undervalued or an underperforming company. And then I collect information about the board of directors who are there on the board. So doing the background check, or have they been involved in any litigations, or how was their performance and all those things. And you know very well, the board of directors do get elected through annual general meeting by the majority of the people who are holding shares. So what as an investor I'll do, I'm a shareholder. So what I do is I try to influence and get other shareholders who are the major shareholding, who have the major shareholding in the business. And then what they do is they try to revamp the entire board of directors. And they try to place in new directors who are actually having a good track record. So once the leadership team, once the board of directors are changed, you know, this will actually bring in differences in performance, the way the corporate will be taken forward, and automatically there will be a rise in share prices. So for example, the share that I have bought, okay, it was just $10. I'm just giving an example, okay? So it can go up to even $100. So what I do is at that point of time, I do the disinvestment from that company and take away the profits. So this is called an act of activism. Okay, this is called activism, and we have lot of proxies and other things. Okay, so like if you see the constitution of board of directors, when it is revamped, when it is actually changed, you know, that will give a different perspective to the organization itself. So that is what constitution of board of directors. So quality of each director and his contribution. If the director takes, I would say rather advantage of his position or power, of course that's going to impact. Role as influencer, teamwork and trusteeship role. Then coming to fiscal and financial policies. The evolution of the capital management system, dividend policy, fiscal policies and controls, and their application in different areas of corporate activity. Then coming to operational effectiveness. The evaluation of the management performance in each relevant operational area. So that could be sourcing, labor, waste control. There are so many issues in a company. Okay, it's not just the sales, the volume, the numbers. Okay, there are a lot of things that are associated. So how all these parameters in the operations are evaluated and how effectively, it is not that you target a particular problem and work on it. There are different issues in different places. So how do you target it and how do you change that particular threat into an opportunity, and how you improvise on the operations is what is operational effectiveness. Okay, then the need and importance, it's all not required. Yeah, how is management audit, a process is adopted for the implementation of management audit? First one is objectives for introducing management audit system. Progressive management wants proper and independent evaluation of its activities, including decision making process. To achieve it, the management auditor is the person who is appointed. So his function can be either outsourced or he'll be an internal guy itself. Okay, so we have something called MBO, management by objectives. So how this management audit system is introduced in an organization is a part of management audit. Then critical appraisal. So the role of management audit is to critically appraise all the activities from all the possible angles. It could be technical or non-technical, that is including the process improvements, and provides independent feedback with suggestion for improvement. So if you look at management audit approaches, what are the things that are taken into consideration, or what is the scope? First comes effectiveness of the formal organization structure and organization charts. Then appraising the decision process effectiveness and the hierarchy that is followed. And management information system, MIS, it is the line of communication that flows throughout the organization. And it's not just downward communication, even the upward communication. See, downward communication is where the policies, rules, regulations, the objectives are communicated to the lowest level of an organization. That happens through downward communication. Upward communication is basically reporting, and then also giving the feedback right from the lower level, how they have the challenges that they face, the improvisations that they want to bring in. So that is an upward communication. So both should be there in an organization. The bottlenecks to the communication should be actually spotted, and these bottlenecks should be removed. Because communication at the right time will help in a right decision making. So these are all, if you see, you can easily correlate with your knowledge on the management side, the process of management and stuff. Various policies and status of deployment, including further requirement to strengthen the activities, adherence to statutory regulations for running the business. Okay. So this is all about management audit functions. So it is mostly your organizing, your process of management. That is what is involved here. Okay. So how you are going to do audit check of various corporate divisions or departments? We have seen different processes and the way it is done. So I would say rather it is a bit of more theory. Okay. But when it comes to corporate divisions and departments, you can imagine yourself in that position to study, right? What are the things you will bring in? What are the audit checks you need in that particular division or department? This is quite interesting. Okay. So the following questions when it comes to strategic business planning, okay, a checklist is actually prepared in a structured manner. This is regarding various departments and divisions that is functioning in an organization. So you have finance department, you have HR, you have production team sitting in there, you have sales department, you have the finance department, right? So there are so many departments, so many operations, and each and every department have their own roles to play, their own targets to achieve, and their own shortcomings or some bottlenecks that actually proves to be a hindrance for their achievement or performance. So what is this checklist? The checklist aims to help the auditor in course of review in performing the task in a structured manner and also ensure completeness against the planned objective of accomplishment. First one is strategic business planning. So we know the SWOT analysis. So what is SWOT? Yeah, you can just type in. Yes, the SWOT analysis. Yes, strength, weakness, opportunity, and threat. Yes. So it's not just enough if you know your strength, but also work on your weaknesses and try to translate into strength. Then coming to opportunities and threats. Opportunity is the way, like if there is a technological advancement and you get the opportunity, and a technological advancement can also be a threat for your business. But how you adapt yourself, take that, absorb it into your organization, is how you translate even your threat into opportunity and make your business run. So the following questions are to be raised by the management auditors when it comes to departments which are under the audit process. First one, whether the entity is having a mission or a vision statement which is aligned with corporate goals and department goals. See, the corporate goal is the goal for the entire organization. There are various departments which are functioning. So these departments will have their departmental goals. So on the basis of which the performance of a department is judged. These departmental goals should be aligned to the mission statement. That is the entire corporate goal. So while you look at departmental goals, even if you go further down into it, right, you have various employees who are working under that. So how these individual goals are translated and are put together to achieve that departmental goals is the next step. So how should be your goals? So we know the SMART goals. S stands for specific. It should be specific in nature. It should be measurable. It's not like we have to perform well. It's a vague statement. We have to raise our profits by 5% or increase our sales by 5% in the quarter one. That is something which is specific, measurable, and it should be achievable. You don't set a target too high wherein it's not achievable. So a goal which is not achievable, it is a demotivating factor. Then relevant, how far it is relevant to your corporate goal, and the time frame within which, as I told, in Q1, this is what is expected. In Q2, so you give the time frame within which it needs to be achieved. So that is about SMART goals. Whether company strategies to address the target market, acquisition, entering into new geography, market penetration, taking up competition, all these are effectively pursued or not. And whether the outcomes are compared with the target. Then coming to the organizational structure, it's once again the repetition of what we have seen, but there are certain terminologies that you have to look into. First one is job description. If you are looking at organization structure, there are different job roles that are being played at different levels. So each and every designation comes with a job description, which should be aptly documented. So what is expected out of the person who is taking up that job should be described first. Next, delegation of authority. As I told, authority without responsibility and responsibility without authority. Both cannot work, okay? And whether review of structure is carried out from time to time to cope up with changes in the business scenario. It needs to be taken into consideration. Then coming to finance and accounting. It's really wonderful. One thing is, so what are the things as a management auditor you will think about when you go for an audit of a department which caters to finance and accounting? That is basically a finance department. What are the things you will look into? Yes, you can type in. Yes. Financial statement, inventory, ARAP, of course. But when you look into a department, right, these are all like the reports that you get. How should be the system? What is the financial system in place? What is the software? Okay, what is the level of supervision, or what is the line of approval? See, in case of transparency, it's a very good thing. How transparent it is, right? And then even the levels of approval. See, when you are dealing with finance, well, for example, a check needs to be released, there will be thresholds. So if it is more than 50,000, it will go to the next level approval. So how are all these managed in a system, in a finance department, is going to actually have a check? Yeah, no complexity. Fine. Then what else? This is from the finance department wise. Yeah, hierarchy, the lines of approval. Yes. Then and how the financial reports are rolled out, because these reports are going to be helpful in decision making, right? So how these accounting results are published, and time to time publishing of that reports is going to help in timely decision making. Yes. So if there is a ERP in place or a system in place for accounting, however it is debugged or there are no issues with the system, okay. So system audit is one of the important nature, I mean one of the important feature to be looked into. Fine, okay. Then moving on to tax department, okay. Now I am into the taxation department. So what are all the things that I would look into as a management auditor in tax department? You can put your views, yes. What comes to your mind? Proper payment of tax filings within the due date so that you avoid penalties and interest. Yes. Settlement of taxes. Basically the compliance with respect to tax provisions. Yes, proper record of refund claims, because that is going to affect the monetary position of the company. Yes. Reconciliation, of course. If you look in cost audit report, one of the annexure is GST reconciliation. Okay. Yeah, then and if you get any communication from the tax departments, right, so you should keep a track of it and duly you have to reply back or respond. So this mechanism is also important for a company. So if you don't respond within the time limit, right, it's like violation. There's something you are dealing with, rules and regulations. Fine. Okay. Okay, so taxation. Yeah. So these are the features you look into. Fine. So shall we take a quick break of 10 minutes? Yes. And then join back for the remaining stuff for today? Yep. Okay. So I'll just mute myself. Yeah. Okay, let's resume. Now coming to budgeting. Okay. So what are the things that you think a budgeting, like how the budgeting should happen? So in first place, what are the things that you foresee? Okay. First one is budgeting happening in first place or not? And it should happen for major activities. So what kind of budgets you think are the major ones? You can type it in the WhatsApp group. Yes. Sales, of course. Sales budget will give you what estimation of sales that you make, and based on that the production will be geared up. So sales will lead to the production budget also. Then RMC, what is RMC? Okay, raw material estimation. Okay, so that is material budget. Yes. Then what else you have? Expenditure. Capex is not happens that every year you invest in capital expenditure. Okay, but still capex is one of the budgets. Yes, because it is highly capital intensive. And taking into consideration iteration of your workforce, even HR will have a budget in place. Budget need not be always in monetary terms. That you should keep in mind. So HR may give you the estimate of skilled workers or unskilled workers or semi-skilled workers they require. Fine. Next. Just a moment. Yeah. So coming back to budgeting, okay, whether approval is being obtained for the budgets, and of course while the budgets are prepared, the actuals, how far it is being compared with the budgets, and like budgets, it could be like you would have experienced. It's not just enough if you prepare the yearly budgets. So you have yearly budget which gives the budget for the entire year, and we have also monthly or quarterly budgets being rolled out. Why is it so? Because you cannot just wait for an year to assess how far your actual results are matching to that of your budget to check your performance. So it happens every quarter actually. Okay, and budgets, how flexible they are. Budgets are also needs to be flexible. They need to be flexible because it should be flexible according to the current situation. It should not be rigid enough. So these are all the things that you take care while you do the management audit of budgeting. Okay, then coming to cash management. So what do you think the cash management? Of course, here comes the capex, opex, and all those things. So what are the things that you would foresee, look into when it comes to cash management? Yes. You can write down your responses in WhatsApp. Yes. Cash requirement, accounts payable and accounts receivable, the proper flow, yes, wherever the cash is involved, okay, the proper flow. Then cash inflow and outflow statement. So in brief, it's cash flow statement, the movement of cash during a year, yes. And how do you meet your cash demands? How do you have credit policies in place which will not have an immediate effect on your cash outflow? Yes. Then what else comes to your mind when it comes to cash management? Cash requirement based on the credit policy, yes, to pay out your suppliers. One is the outflow of cash, another one is inflow of cash, of course, supplier terms and conditions. Then even collection from your debtors or the customers. So how is your credit policies with them? How have you geared up your collection process so that you get cash pumped into your system? So cash to cash conversion cycle, basically if it remains less number of months, the period is less, then you flow back cash immediately into the business, so therefore your working capital requirement goes down. Okay, so cash to cash conversion cycle that you got to maintain. Amount receivable from debtors, of course. Any other recurring income receivable, yes, like where the investments are made outside, the interest or the dividends, that is receivable, that is accrued income. Then of course, how much cash should be in liquid in nature? That is also part of cash management. So while we have studied the cash management in management accounting, right? So we have different rules for cash management. So like inventory management, you also have EOI, that is economic order quantity of how much of cash is required. So it has carrying cost, transaction cost and all those things. Yes, so all these things, all these techniques, whether they are used in proper cash management, because there should not be excess cash held by the company, because that is idle money in place which will have its opportunity cost. And when it comes to deficit in cash, it is going to affect its day-to-day operations. So how do you plan out that thing, and how do you hold a liquid cash as part of your cash management? It's art actually. Okay. Then we move on to the next department, that is pricing and cost saving. So what comes to your mind when it comes to pricing and cost saving? So first let's talk about pricing and then go with the cost saving. So pricing. What are all the factors that affect pricing? There are internal factors, external factors. So what are those things? When it comes to pricing. Demand and supply, of course, market demand. Competitive prices, that is pricing strategies. Initially, well, you do market penetration. Like for example, in the case of Jio, how did they penetrate into the market all of a sudden? Due to which you see There are a lot of fall in prices in the telecommunications. Got it? So how do you offer a price which is attractive and penetrate into the market, and later on you capture the market and then you go for pricing decisions. So that market penetration is one of your outcome of your pricing decision. Yeah. Of course, competition. How do you offer the competitive prices? Yes. Cost saving. Now, leaving off the pricing perspective, pricing is the price that you fix up. Cost saving is one thing, because cost saving with the price fixation will decide about the margin in between. That is the revenue. So what are the things that you will think about when you look at cost saving? Different departments involved in cost saving. Yes. Like SRG. What is SRG? Multiple supplier database for excising cheaper prices. Yes, that is part of your purchase management. Alternative options for one critical item. What does that mean? Okay, that means finding a substitute for your own raw materials. Okay, then comes the economies of scale. Yeah, then make or buy decisions. So this is part of our marginal costing. Whether we want to make a component or buy it from outside and use it in our final product. Yes. Exploring different geographical location for cheaper prices. Yeah, of course. Yeah. So how do you, but that will be a capital intensive once more. Like you have to set up your organization, right? So existing cost saving methodology, bulk purchase, which you already mentioned. Yeah, bulk purchase, but at the same time the EOQ should be taken into consideration. How do you fix up sales price? Sorry. And other things. Fine. So then coming to using byproduct as input for process costing. Yes, that will be a part of your recovery. Then purchasing. Well, it goes to the purchasing department. What are the things you will look into? First is the vendor database, the supplier database. The suppliers are the one who are supplying us. The quality of supply that we receive. Okay. Because there comes quality which is going to ultimately affect our final product. Then what else comes to your mind? Well, it comes to purchasing department. How should be the purchasing department acting? So when we look at purchase, say raw materials, quality, quantity, the time of supply, yeah, and the maximum credit period that we enjoy from them. That is of course there. So the quantity, the right quantity of materials supplied at the right time and at the right place is going to help the production process to move on. So these are the three things. Then the brand of material, more than brand, it's the quality of material, right? Because when we look from the supplier side, if it's a trading, then it's a different kind of a perspective. But if it is a manufacturing organization, it is a translation of raw material into the final product. So what is the input? The quality of input is going to determine the quality of the output. Of course, the processes do have its role, but the quality of input is going to have a bearing impact on the quality of output. Yes. So how do you maintain the vendor system? Yes. So right from placing a purchase order, receiving the goods and the invoice getting raised, and these invoices getting monitored and paid off on time is part of all your purchase department stuff. Okay. Then we move on to marketing. Anything else you have regarding purchasing, you can just put it. Yes. Then moving on to marketing. What are the things that come to your mind when it comes to marketing of products? Yes. So it is basically related to your sales organization. So what are the things you will look into when it comes to a sales department? Sales budget, of course. Modes of marketing channel. Yeah. We can also include the distribution. Customer preferences. Yes. How do you create reputation for yourself? Customer convenience. So you are more closer to customer analysis. Unique selling proposition of the product. Yes, of course. USP of the product. Competitive advantage. Yes. And how do you market it is important. So how do you reach the customers to convey that yours is something else? Your product is something superior than others. Finance options for buying. Of course, that is also one of the marketing technique. So now we have all these zero cost EMIs rolling out, right, which are very much attractive. And using credit cards, you get a lot of discounts. Yes, durability of the product, utility of the product, after sale services. But after sale services is one of, actually it's a part of sales department itself. So how do you reach out to the customer and how do you make them to make the orders every time? Stick to your organization is part of marketing strategy. Okay. Next comes risk and insurance. Of course, whatever kind of activities are carried out in an organization, so there is always risk involved in it, and how do you ensure that? How do you mitigate or transfer that risk? So whether risk has been identified, how it is managed, how the mitigation process happens, and whether business risks are analyzed and responded and opportunities are explored, and whether the entity opts for insurance cover against the insurable perils. and whether appropriate policies are chosen to mitigate the risk of this insurable stuff, and whether non-transferable risk are reviewed regularly for appropriate cost-effective mitigation plan. Like for example, you have evaluation of purchase management, personnel management. So this is a different stuff actually. Risk and insurance. So when we talk about risk and insurance, there could be also plans. There are something called business continuity plans, BCP. What is this? There is a risk of natural calamity or even a war happening, right, in a particular location where the business is located. So in such case of emergencies, how still your operations can go on should be the backup plan. So that is called business continuity plan. So I would like to quote a reference from one of my organization where I previously worked. That is in, while I was working for HP, right, we were into financial processing, financial transactions, costing and stuff. So when you look at the finance departments, see the month-end activities, you have year-end, month-end, quarterly and all those activities. And there are certain deadlines within which these needs to be completed. It's not like it goes without deadlines, no. So but if something happens in the location, okay, but still your business should continue. So what we were, it's like a mock drill that they had as a plan. Like for example, this location was basically in Chennai, and we have another facility in Bangalore which is a 4 hours drive from Chennai to Bangalore. So how do you travel? So it was a thing which was given to us, a task. A group of people were selected. We were transported from Chennai to Bangalore, assuming that you cannot operate in the Chennai location. That was an assumption, okay. So then we went there, and without any hindrance, how we were able to carry out the same level of transactions during those days without affecting the business was what monitored. So such BCPs, they call business continuity plans, is one of the way to overcome the business risk. This is basically the functioning of the business itself, or functioning of a particular group of functions. Like it may be finance, it may be sales or anything, but it was basically for the finance function. So how could we carry out, how could we simulate? Okay, so what are all the points that we had in mind, or what went wrong in the operations? They're all taken care, studied, and then the remedial measures were given. Okay, so whenever you do a particular work, store it in a particular place which is accessible from all locations. So now cloud and other things coming into existence, it becomes easier to retrieve information from the server. Okay, so that way there are many things that are rolled out at corporate level. So BCP is one of the plans which is there to actually overcome such risk that may occur due to calamities or that may hinder the business operations. Fine, and then we have evaluations of each and every kind of a management that we are going to look into. So here if you see, we have evaluation of purchase management, basically concentrating on the purchase department. Evaluation of personnel management, that is dealing with the human resources. Evaluation of production management. Evaluation of research and development activities. So initially the negative concept, okay, so how far a company gives importance to its R&D activities will help the company to sustain in the market for a longer period of time. So how far the management is going to spend on R&D is actually going to have a growth perspective in future. Because whatever money is spent today on R&D, right, it will not be fruitful immediately. It will take some time for give you the results. It may be a failure or a success, but still the company should strive hard towards R&D activities. Then comes marketing audit. So evaluation of sales management, evaluation of distribution function. It's more or less like what we have already studied, but just we will get into the important features of this. Now coming to evaluation of purchase management. Whether a separate organization structure with authority level exists to handle the procurement function. For any manufacturing to be handled, right? The procurement is an important process. So estimating the production, based on the production, you procure the materials. Purchases happen. Whether there is any purchase policy available and whether it is reviewed from time to time. And what are the purchase requirements based on material planning? That is what we saw. We prepare sales budget, we do forecasting, sales forecasting, based on which the production will be forecasted. And based on the production is how the procurement is going to happen. Whether supplier selection process is laid down and negotiation takes place with them. This is basically the vendor management. Specific quality, cycle time, factors that are considered before finalizing the deal with the vendor. And what is the best rates that we can get from our suppliers, because this is going to ultimately affect the cost of the product. And what are the follow-ups that are made for ensuring timely supplies. Vendor rating process, whether it is in place or not. And whether SOB, that is share of business, is being monitored by the department to prevent possibility of excessive dependency. So these are all part of evaluation of purchase management. When it comes to personnel management, of course personnel management is a very difficult place because it is easy to deal with materials, non-living beings. But when it comes to dealing with human resources, each and everybody, their behavior is rational, that is they strive hard for their self-interest. But how do you bring them into an organization? How do you mold them? And how do you make them work towards the organizational goals is one of the toughest things. So whether the HR is vibrant in the organization, that is they are in constant touch with employee or the workman. Designated HR representative, they have function-wise, department-wise. And HR policies that are rolled out right from the recruitment, interview, onboarding until you exit. What are the rules and regulations? How it is dealt with? That is HR policies. Whether goal setting and performance monitoring happens. Like even goal setting and performance monitoring, you might think it is part of a managerial role. But it is out of the HR policy that the assessment happens every year, appraisal happens, the ratings are released, and based on the ratings, the compensations, the incentives, what is that which is rolled out is decided upon. So these are basically guided by HR policies. Whether training needs are identified and imparted as per the requirement. Whether periodical job evaluation. So we were talking about JD, job description. See, job description is what is expected or what are the assigned roles and responsibility for a particular job, what is expected out of that job. And at the same time this needs to be evaluated. That is what is job evaluation process. Whether manpower requisitions, budgeting of cost and manpower etc. monitored and approval obtained from the recruitment, for recruitment. Attendance, salary, wages, how they are fixed, it should be matching the industrial standards too, okay, according to the market, demand and supply of the resources, human resources. So like we were talking about the quantity, quality of raw materials, similarly, how many people you need, that you need to estimate the quality of people who are going to contribute towards the organization, and how do you make them stick to the organization for a longer period of time. As we have already seen in manpower planning, how labor turnover is a big cost for the company. If the iteration is more, it is going to cost the company more. Then whether salary, wages, rewards, etc. are billed after due consideration of approvals. Whether regular communication is conducted to maintain industrial harmony. Employee turnover is below the industry average. So that is what we spoke about. And labor welfare schemes. That is what you check when you take up a job. So how secured? Like, let it be an insurance, let it be contribution to PF. All these things will actually ensure. These are all labor welfare schemes. And whether safety needs, this is important. Like in workplace, what are the safety measures that are carried out? So especially in, if you see in construction areas, right? How far the safety, even working on machineries, okay, there could be fatal accidents that could even take off, that could involve even the loss of life or make a person disabled too. So how far the safety measures are followed in such kind of manufacturing setup becomes the safety needs, and how they are actually met. So accident free operations. This is basically when it comes to your skilled labor who directly deal with machineries, okay, and stuff. And whether job rotation process is resorted to for preparing pipeline of able employees. That is, you bring in people from your own employees, from your own org structure. So that becomes a motivation factor too, because that is the job rotation actually kills the boredom that is attached to a particular job title. So you keep doing the same thing, you feel much more bored about that thing, and that will actually demotivate a person. So when you are put in different roles, okay, so that gives you a level of confidence, okay, and you kill that boredom and you come out of learning the end-to-end process. So that is also one way of motivating people. Non-monetary. Whether monetary and non-monetary benefits are balanced in CTC, that is the cost to company. So when you look at your CTC, right, in your offer letter, you will see what is my fixed component, what is my flexible component, and flexible component, how far it is. So we usually would like to have more of fixed component than that of a flexible component, because this is a variable pay which depends upon too many factors like your incentives, the performance of the business, and all those things. Got it? So this is basically a sensible area when we come to evaluation of personnel management. Then moving forward, evaluation of production management. This we have already seen. Okay, so I won't bore you with this, because production planning happens from your sales forecast. Based on sales, based on what your sales team tells about, like this is what is going to happen, or this is what is the situation that we forecast. Based on that, the production is jotted down. Based on the production, your raw material budget, your human resource, everything is planned out for the year. Okay, then coming to R&D activities. R&D is an important field that needs to be looked into, because many companies ignore R&D, saying that it is too much of expenditure which is not going to pay you back. So the visionary about R&D needs to be changed. A management auditor of a company can appraise and evaluate activities of R&D based on the following checklists. First one, whether R&D is a continuous process and used for the betterment of product quality, cost reduction, change in process of production, or new product discovery. See, when it is for the existing products, all companies feel it is rewarding, because you can feel the results then and there, the financial results. So if you are going to improvise your product quality, if you are going to make it more innovative, taking into the latest technologies, if you are going to reduce the cost, then you are going to be high on your margin. Okay, and whether the entity have a vision to achieve the above through research and development. and what is the budget allocation for R&D, and whether appropriate quality of people are manned in R&D. So they should be SMEs, subject matter experts, process experts, who know very well how the product works and who know the emerging trends in the market as well. So the quality of people who constitute this R&D is going to have an impact directly on the results of R&D. And whether the board of directors identify or endorse the board's type of research to be undertaken. Of course, the support of BOD is required. And it is considered, whether it is considered as an independent department in the company, and how are the results properly recorded, classified and analyzed, and implementation of R&D suggestions. The benefits outweigh the cost incurred. This is what is cost benefit analysis. When you feel the benefits outweigh the cost, you work on it. Then comes marketing audit. Yeah. So what are the things that you look from the marketing perspective? So this we have already discussed on the objectives, that is target setting and methods of accomplishment of objectives in detail. Then program is to appraise the efficacy of the marketing programs. Organization, that is how is there a marketing department separately placed in an organization? Yes. Then comes evaluation of sales management. This is once again the sales function. SWOT analysis, these are all something repetitive in nature. Then coming to distribution function. This is something new that we are going to look into. So when it comes to distribution function, what are the things that comes to your mind? Yes? So there are various aspects to distribution function. You can put it in the WhatsApp. Yes. So when it comes to distribution, what are the things that comes to your mind? Distribution network, wholesale, retail markets. How is that the distribution going to happen? Directly to the customer or through retailers? Yes. Existing customer base, logistics, yes, that is the distribution channels. Type of product sold by the customer. Market networks, that is what, dealers, agents, retailers, franchises. Okay, even that is one of the distribution network that we have for big brand names. Okay, so all these are the distribution function. Then comes the marketing, capacity configuration. Whether the production, marketing and distribution capacities provide an economical means of meeting the necessary customer service criteria, and whether adequate inventory levels are maintained for smooth operational flow, and whether any ramp up is required for smooth operation. Staging of inventory, whether past order trends are perused for inventory holding in each of the distribution channel, and whether the flow of finished goods inventory through the distribution process is reasonable with the acceptable service limits, and inventory physical condition check and segregation. So when the products comes with expiry, right, you should be very careful. So which kind of inventory system is followed? This is in case of finished goods. Then transportation mode mix. Whether a transporter registration process exists, whether route, distance and vehicle availability is factored into fixing freight, and whether delivery times are tracked for transport efficiency measurement. The turnaround time within which the products are ordered and they are delivered at the customer site. And multi-modal arrangements, if so safe handover is ensured at each point. That is, it is through different channels. Right. So you supply to someone and from there the products is picked up by the other. So it is basically part of supply chain. So we are here on the distribution side. So from the distribution side, if there is a multimodal arrangement, then how far the safety is followed in passing on the product from one hand to another hand is ensured. And whether the present model has been selected considering the cost and service capabilities. Okay, so these all form part of your distribution. And then comes the budgeting, controlling system, adequacy of budget control system. It is still, I would say this is a repetition. I don't know from where they have brought this topic in between. So we have been talking about the budgeting of each and every department. Alright. So what is that? In the budgeting is basically planning for and translating your plans into numbers, into quantity. It's not necessarily it should be translated into financial terms. It could be even the quantity, like what is the budgeted units that I need to produce for the forthcoming year. So that is how is budgets looked into. So it is basically planning. And how do you bring back the coordination? That this is being communicated to different levels in an organization. And then the results are matched with the budget, which is your control process. So budgeting has inbuilt control process in itself. So that is what is budgetary control system. And we have seen what are the major budgets that we prepare. Sales budget, production budget, cash budgets. Alright. So I think I am done for the day today. So the next topic that we will be discussing is about ESG audit, which is a new perspective on environmental, social and governance reporting. This is a new thing, is a newer concept for Indian industries. After that we move on to the security audit, IT security. Fine. So that's all from my side for today. Have a great day and good night. Thank you.